Welcome to another Dow Jones update. Okay, so on the long-term chart, the monthly, you can see that this is the Arias wave, B wave, expanded type 2 zigzag since the Great Depression, right? So in this video, this is basically, well, we can call it the doom and gloom video, but I have given you the less doom and gloom video, which is this could be a GFC 2.0, basically starting soon. But in this video, I'm going to give you some reasons why this could be the actual top of the entire market since the Great Depression. Okay. So as I've said before many times, we have been completing a wave C in brackets since 2009, right? So it's an ending pattern, right? It's a well, it's a week 5 wave move. Right? It's like an ending diagonal, all right? Except I don't like to really throw that around too much, but that's what it is, right? So, I mean, if you look at wave A in brackets, that was a fairly standard 5 wave move. Wave C was a bit choppier, right? So it's weaker. Even though it's not weak, I mean, we know what kind of gains came out of that, but that's not my point, right? So let's go to the weekly chart now. Okay, so according to my count of this, right, this is the ending pattern. We have 3 zigzags going up to the highs, right? So we have wave 1, right? This is a zigzag, and then we have a very small wave 2. This is a zigzag for wave 3, and then due to wave 2 being small, wave 4 is drawn out and sharp. So I'm going to get into why I believe this could be the actual top of this entire move, right? Now, it all boils down to the move we saw last year, right? Something happened that basically sped up the correction and made it very fast, made it complete very fast. So let's go to the daily for a moment, and I'm going to explain to you what I'm talking about. So here we have our A, B, right? Now, to most, this may seem like a C wave, right? Except there's a problem with that. And I'll actually have to turn on the labels so you can see my count. Right. So within this move, there are, in my opinion, 3 waves going on in here. There is a C, a D, and an E, right? So normally a C wave would have been this small. Well, not normally, nothing's normal, right? But this is a C wave. This is, and then, you're probably thinking, well, that's a 5 wave move. That's a C wave. Well, no. For this, I'm going to have to go to the 2-hour chart. Okay, now this is something that I've been doing some analysis on, and I've been finding some very interesting things going on here, right? Now, first of all, this wave here looks very different than the rest of the structure, right? And the reason is because it's a C wave. It's a wave all on its own, right? So you had the small 1, 2, and then you had your 3, and then 4, 5. Okay. Now, if this was part of this structure, then obviously you'd call this wave 1, and then you'd see, okay, that's wave 2, and then what's wave 3 and what's wave 4, right? And if wave 3 is the longest, wave 5 should be basically simmering. Oh, you can't do that. Would be similar in length, right? And clearly that wave wasn't. It was not similar in length, right? And the reason for that is because they are separate waves. Okay, this is what I believe. I believe that this is the count for the E wave. So you have 1, 2, 3, 4, 5. Okay, wave 2 was short and sharp. Wave 4 was 3, 3, 5, 3, 5. Okay, if you on the US 30, you can actually see it a bit clearer. But on this chart, I'm able to show you the long-term view as well. So this move here is a expanded type 2 zigzag. It happened fairly fast. And this is not uncommon. This happens a lot, right? Which is probably the reason why Elliotticians seem to think that everything's either a just an ABC, right? Because you could easily think that's an ABC done, right? So, but the thing is with Ellioticians, I don't even think they believe this whole move up is an ending diagonal. I think they just think it's just a straight 5-wave move. So I'm not going to get into that. Now, this is wave 5, okay? In my opinion, this is it. This is the last move. We've seen it. It's complete. You've seen my wave count. You've seen my ideas, right? Now, that's one piece of it, right? So what else is there? Well, let's switch to the Australian 200 chart for a moment, right? I'm from Australia, if you can't tell by the accent. And this is the ASX, right? It follows the US market somewhat closely, but obviously it hasn't had the same performance as the DOW or any other US market for that matter. But this here is basically a wave 4. Now, this wave 4 was expanded for many years, so I won't get into that. But basically, this is a ending diagonal wave 5. Okay, so you can see wave 1, 2, 3, 4, 5. Yes, that's a zigzag in there. It's type 2 expanded. And then we saw, boom, wave 1. So we have a wave 2 here. Now, when you look at the real estate index portion of this Australian market, I'll show you quickly now. Right, you see something very interesting. You see that the market topped in 2007, created a wave 1, right? And then it created a wave 2, right? You see that? I have it all marked out there. A, B, C, D, E, right? Now, I did actually mention this before in a previous idea that wave 3 of wave E, you can see was the strongest there. That's a sign that was a wave 3 and that this is an ending diagonal, wave E, right? And wave C was also strong there, right? Just quickly touching on that. Now, after that, we saw wave 1 of the next move that's coming down, right? And within that, there's already a complete correction in there. A break of the magenta line will say, okay, this is ready to go down. So something is definitely happening in this market, in the Australian market, that's pretty significant. And it's lining up very well. Now, okay, so I won't go into that. I was going to say, well, I'll mention it quickly that usually what happens with the Australian market tends to top about a week after the Dow Jones does, whenever there's a major top or a significant top, which is interesting, right? So at this point in time, this is the version of my count, which is saying that, look, this is basically done, okay? And so what will we expect to see in this scenario, right? Now, I've touched on this sort of thing before, right? And I've mentioned it many times, even in this video, that when B wave expands, right, you tend to see the CDE happen in one go, right? So I'll just put a mini zigzag in there so you can see it. Now, how small that zigzag is, I don't know, and I'm not going to get into that here, right? Now, I'm not saying it's going to go that low. This is basically just for illustration purposes, right? It could go something like this, right? Yeah, it's just for illustration purposes. Okay. Now, I did mention once that there is a long-term trend line that's going something like that. So we could see something like that happen, right? This is just very rough and just to give you like an idea of what I'm thinking. So what would this mean? Well, B, C, D, E, that would be the end of the correction, right? That's what I'm thinking is going to happen in this scenario. So that's pretty devastating, and it's pretty insane to think that the market could fall, what, 96%. That's basically a Great Depression all over again, right? But deleveragings happen. It's part of market cycles, the long-term debt cycle, and all these sorts of things. And I mean, we can see quite clearly that there's a lot of mania going on in the markets. You could even see something like a sorry, one second. You could even see something like a head and shoulders pattern appear, right? Just for those out there who like patterns, particular chart patterns, right? It could happen, right? You could see something like a head and shoulders in the Dow Jones, and then boom, down to retest that long-term trend line, which actually goes back hundreds of years, especially when you joined onto the Euro markets long-term, right? So this is the kind of thing that would not surprise me if it happened, right? Would not surprise me one bit. Now, whether you want to believe that or not, that's up to you. You can just say I'm crazy and move on to the next guy who's using macro economics and maybe even an oscillator of some sort as their sole way of looking at the markets. But here at Arius Wave, we use a very special methodology, which is getting my interpretation of how to use it is getting better, because it's all about practice, and because the framework is pretty cool, but applying it takes a lot of practice, which is why we have wave revisions, right? So if you've seen a lot of wave revisions, it's because we're basically just preparing to trade the market, right? It's just preparation. It's just so we get it right once the time comes to short, which obviously you've seen my ideas when it comes to the US 30. So I'll just go to a smaller time frame. I've just zoomed in way too much there. Right. So as you know, as per my ideas, that basically this is the top according to my count, and that we've seen a bit of a bounce here, but you know what, that happens at tops. Sometimes they bounce pretty high. In my opinion, it's to basically shake everyone out of a short. Lately you hear a lot about short squeezes going on and all this sorts of stuff, right? I wouldn't be surprised. These are just signs of the end of a trend, right? A lot of mania trading going on, all these GameStop, AMC type events going on with traders and retail traders. Basically, just the whole market is at a mania top, in a bubble, right? So, I mean, I don't use these things as a guide for myself to say, oh, it's a top because of that. No, 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 no. I'm just saying these are things that happen at tops, right? Look at history, right? Um, the shoe shine boy. I mean, that analogy is true today with people, just regular people, getting into these type of into stocks and cryptos and that sort of thing, right? Now, with my crypto idea, with Bitcoin especially, right, you'll notice that it's the same kind of deal with what's happening in that market, right? And it's actually, I'm just going to touch on it quickly because I just find it interesting how, when it comes to Bitcoin, we're at a B wave top, and I'm expecting this kind of move. Right now, I'm not saying it's going to be devastating like this, but you know what? I'm expecting a CDE down in Bitcoin, right? So how Bitcoin handles that will be interesting, right? Because I mean, if you look at the way Bitcoin has traded since 2009, right? It has been basically 5 waves up and an AB, right? So what would be the rest of that correction? A CDE, right? So that's why I use the waves, and I'm going to track all these markets, and I can just see that there's a very interesting things going on. And mind you, once we get to the bottom of this, it's time to go long all over again, right? The Great Reset, these type of things, right? I do believe that these things are real and they're in play and they're going to happen extremely soon. Okay. So at this point in time, this is my view. I'm going to obviously be tracking a lot of these markets movements. And I thought I'd give you the doom and gloom scenario because I've already given you the less severe scenario. But for some reason, I can see things lining up, and I do play devil's advocate all the time. So it's not like I'm just looking for the doom and gloom scenario. I'm actually trying to be realistic here, and I'm just using the waves the way that I use them, the way that I see things. Okay, so if you want to call me a troll and or this is troll analysis or whatever kind of crazy stuff people call me these days, to me it's just a sign of, it's a shoe shine boy sign. I mean, what kind of people are actually trading these days to be so crazy about what they're trading, right? It's too much mania, too much crazy people in the markets lately. So to me it's a sign. Now, hopefully you found this video interesting and informative. Thank you for watching.